You know, sometimes my mind goes mental when I hear some of my subscribers or even some of my students still struggling with some of the basics of daily and weekly chart trading. Okay, after doing all 300 videos, putting so much effort, if a subscriber is asking me questions about basic chart layout, I really don't know which prayer I should select from all the prayers that are available online so that I can pray for you to become a professional, positional, or swing trader in the market. So I want to solve this problem once and for all through this video because my mind goes mental sometimes when people ask me extremely basic questions. Okay, so remember this golden rule. Weekly chart means bar chart. Daily chart means candlestick chart. There is a difference between bar chart and candlestick chart. What is the difference? On the bar chart, you don't have the opening price. Why is it that on weekly we have bar chart and on daily we have candlestick chart? Because on daily time frame chart, when we are taking a trade, the opening price is very important for us. On the weekly, since the price range is uh, very large, the opening price really does not matter. That is why we use a bar chart on a weekly time frame chart and candlestick chart on a daily time frame chart. Moreover, there are windows in the daily time frame chart. On the weekly time frame chart, you will seldom see windows. And falling window in our system is extremely important resistance level. So unless the falling window is inside the base is broken by a bullish candle on the daily time frame chart, we cannot take a trade on the weekly time frame chart. Okay, that is why remember the golden rule. Weekly time frame chart is a bar chart, daily time frame chart is a candlestick chart. Another point is you don't take a swing trade on a weekly chart. Weekly chart means positional. Daily chart means swing. Remember this. Weekly chart means positional. Daily chart means swing. Of course, you can take positional trade on the daily time frame chart as well. In fact, if you take a positional trade on a daily time frame chart using Mark Minervini's VCP compared to O'Neill's weekly pivot buy point, you get a much better buying price. Okay. So again, next rule, remember weekly time frame chart, only positional trade, no swing trades. Daily time frame chart, swing and positional trades. Okay. What is the difference between swing and positional trade? Any stock that meets at least 7 out of 12 of our fundamental criteria, that trade is a positional stock trade. Any stock that does not meet at least 7 out of 12 of our fundamental criteria, if you take a trade in that stock, that's by default a swing trade. Okay. And we are allowed to take swing trade only when the market is in a confirmed uptrend. Positional we can take when the market is in a confirmed uptrend under pressure, and a rally attempt. Okay. Coming to the layout. So I have a daily time frame chart of BHEL, which I discussed in the previous video. Daily time frame and weekly time frame. We are looking at the old chart data as per the SEBI regulations on both the time frames. Okay. So let me remove the pivot points and everything. So have a look at this. So first moving averages. Okay. Let me click on the moving average. So on the weekly, you only have two moving averages, one on the price and one on the volume. Okay. And both are 10-week simple moving average, not exponential. Mind you, please keep the colors also the same. Your chart layout should look exactly like my chart layout so that there is no confusion. Okay. I see a lot of students using different colors. use the same colors that I am using so that we are on the same page. Okay. So color should be based on previous close. It should be 10-week simple moving average. Why previous close? Because on a bar chart, the color is determined based on the previous week close. On the daily time frame chart, we have a candlestick chart. So the color is determined based on the opening and closing of that particular day. This is very important. That is why on a bar chart, you need color based on previous close. Okay. Style, make it blue. The moving average will be blue. The thickness will be second level. This will be 100%. The volume bars, make it green color and make it histogram. Green color 100% full thickness. Red color 100% full thickness. Okay. And it's a histogram. Correct. Do exactly as it is given here. Moving average is simply a line. Okay. This is second level thickness. Tick mark both the things. Hit OK. Okay. Your volume should now look like this. Then come to the price moving average. So thickness second level 100% blue color, and this is line. Okay. This is 10-week simple moving average. Then price. When you click on price, colors should be based on previous close so that the color of the price and the color of the volume will match. We want that color to match because when we look at the base, our focus is on red bars. I'm coming to red bars. Okay. So color based on previous close, you need high, low, and closing price. And thin bars, don't click on thin bars. Okay. We need thick bars. Okay. That's it. This is the chart layout. This is how it should look like. No RSI. I have a student, she puts RSI on the chart. I have told her many times not to put the RSI because it is not required in this system. I don't know whether she has listened to me or not. Okay. But anyways, some students don't listen to me. Okay. That is why my mind goes mental sometimes. See, I have got experience. Mark Minervini has got experience. William O'Neill has got experience. Patrick Walker has got experience. David Ryan has got experience. So when we guys are telling you something, just just listen to it and apply it on the chart. It will help you. It will save you a lot of headache. Treat trading as a profession. Okay, when you go to the doctor gives you medicine based on your blood sugar report and cholesterol and thyroid report and everything. The doctor looks at your report and gives the medicine. Okay, do you question the doctor? No, right? You directly go to the chemist, you buy the medicine and you start the medicines. Similarly, what I am giving you here is a medicine. Okay, just ensure that your chart looks exactly like my chart so that there is no confusion. Okay. I see some people put multiple moving averages on the daily time frame chart, which I'm coming to, and they use one indicator which includes three averages. Okay, one of my students did that, and I found out that there was some coding mistake in that moving average. Well, I said to that student, why not use the basic trading view standalone indicators which are by default available? Why to use Pine script and code and all these things to combine moving averages into one? Okay. Don't use automation. It's a complete waste of time. Next, daily time frame chart. Click here. So make this 50% very thin. Volume, make this 50% very thin red color and make it a column. Okay. Then average, moving average, blue color, make it very thin, 100%. This is a daily time frame chart. Okay. And input, don't click color based on previous close. Okay. Because this is a candlestick chart, daily time frame chart. Moving average, as you know, is 50 day. 50 days equivalent to 10-week. Similarly, moving average here on the price, make it 50, style, make it line, blue color, thickness is very thin, and 100%. Do it for the three of them. So this is 50-day moving average, 150-day, and 200-day. Candlesticks, very simple. Don't click this color based on previous close and give these colors. That's it. You are done. Nothing else required. Okay, so this is the chart layout for a daily time frame, and we also looked at chart layout for week. It's very simple. Okay, and use the standalone indicators. Don't use no RSI, no MACD, no stochastics, no Bollinger Bands, no Ichimoku or anything like that. No lines on the chart, no trend lines, angled trend lines and things like that. Don't do all of that. This is it. This is all we need. This is more than enough. Okay. Going back to the weekly. Yeah. As I told you, whenever you look at a base, okay, the first thing I look at is number of red bars inside the base. Count 1, 2, 3, 4, 5, 6. Okay. Now remember, listen to this very carefully. Don't make my mind go mental again. Listen to this very carefully. Whenever there is a red bar on the weekly chart, and if it is showing low volume, okay, low volume means volume bar below this blue line, okay. Whenever there is a red bar and there is low volume, you can safely ignore that bar, okay. It's not a trouble for us because it is not institutions that are selling, it is retailers that are selling. So inside a base, whenever you see a red bar which has low volume, it doesn't matter whether it is strong closing, weak closing. Okay. Whenever you see red color bar and that red color bar is low volume, you can safely ignore that bar thinking that it is accumulation by the institutional investors. Okay. Second point, listen to this very carefully. Whenever there is a red bar inside the base, if it is showing high volume, then preferably you should have strong closing. What is strong closing? Strong closing means the closing should be above the midpoint of the bar. Okay, so strong closing and weak closing depends on the bar itself. It does not depend on the previous bar. So in this case, this is a strong, sorry, this is a high volume bar. So we check whether this is a strong closing or weak closing. Now check this, the closing is below the midpoint of this bar. That's a weak closing. Red bar, high volume bar, not favorable for us. Okay, this is not what we expect to happen inside the base. So out of six, only one is a problematic. The other five are okay. That is why we consider this base as positive. This is good enough for us to take a trade. But if you see multiple bars like this, or majority of bars are like this, high volume, red color, okay, and weak closing, that's a problem. But if it is high volume, red color, and strong closing, which means closing above the midpoint of the bar, that is acceptable because that indicates that the red bar has bounced from the low of that particular bar. So remember, strong closing, weak closing depends on that particular bar week. Up closing, down closing depends upon the previous week closing. So red bar means the closing in this on that bar is lower than the closing of the previous week bar. Okay, remember these things. Okay, so now you know weekly uh, time frame layout, you know daily time frame layout, you also know why we use bar chart on a weekly and we use uh, candlestick chart on the daily time frame chart. You also understood the reason why we use bar chart, because of the red bars that we have to see on the weekly time frame chart, and because of the things like falling windows and all of that. Okay, keep these things in mind. Make sure that your chart looks exactly as mine. Same background, same candle color, same bar color, same format, same layout, same everything. Okay, just make sure here you make it daily and weekly. That's it. That's all you need. Nothing else you need. Okay, very, very simple. If you have more questions regarding this, please ask me so that you have your basics in clear at least. If your basics itself are wrong, then you will make a lot of mistakes in your trading. Don't let that happen. Okay, so I just wanted to make this quick video to ensure that you have your basics correct. So weekly means positional, daily means primarily swing, but you can also take a positional trade on a daily time frame chart if you have a proper VCP Mark Minervini kind of a setup. If you miss taking the trade on the daily time frame chart, positional, you could come to the weekly time frame chart and see whether the stock is near the buying range, because there is a difference between the pivot point on the weekly chart and the buy point on the daily time frame chart. Remember this. Weekly chart means pivot point. Daily chart means buy point. There is a difference between pivot point and buy point. Thank you so much.